The IRS is giving us pretty decent tax inflation adjustments going into 2024 thanks to the inflation rate from 2022 to 2023. And I also have updates on the marginal tax rates, capital gains tax rates, and standard deduction for single individuals, married couples, and heads of households. And this update matters to you because the IRS made a big inflation adjustment for 2024, which will increase the income thresholds for every American household. And it means that you will have lower tax rates than you did in 2023. And I'll tell you why these numbers will matter to you going into 2024 and how they're going to affect my early retirement strategies.
Tell me everything!
The first one I want to go over is the standard deduction, which is going to increase by 5.4%, which is the second largest adjustment in the last 3 decades after last year's 7.1% hike. So the standard deduction for single individuals and married individuals filing taxes separately will increase from $13,850 to $14,600. This is an increase of $750. The standard deduction for married couples filing their taxes jointly will increase from $27,700 to $29,200. This is an increase of $1,500 for joint filers. And if you're a head of household, your standard deduction will increase from $20,800 to $21,900, and that's an increase of $1,100 going into 2024. The standard deduction is a figure that is set by the IRS every year that can be subtracted from your taxable income. So for example, if you're making $100,000 a year as a married couple, then your taxable income is in 2024 is going to be $100,000 minus $29,200 in standard deduction. So your total taxable income is actually going to be $70,800. You'd be surprised to know how many people actually don't know this or how to calculate this, because I was definitely one of them in my early 20s. And if you're over the age of 65 or legally blind, if you know someone, let's say your parents or grandparents who are over the age of 65, you will get an additional $1,550 per person for the standard deduction, or $3,100 for married couples if you're both 65 years old and or blind. And if you're single and or head of household, you're going to get an additional $1,950 or $3,900 if you're both 65 and blind. So let me give you an example. I know this can get a little bit confusing. If the husband is 65 years old and the wife is 65 years old and blind, assuming that they're going to file their taxes jointly in the year 2024, their standard deduction is going to be $29,200 plus $1,550 for the husband for being 65 years old, and then another $1,550 for the wife for being 65 years old, and another $1,550 for the wife for being blind. That's going to come out to a total of $33,850. So if that couple is living on their retirement income, their taxable income is going to be subtracted significantly with the increased standard deductions. And the standard deduction for dependents will also increase from $1,250 to $1,300, or your earned income plus $450, whichever is greater. And just remember that the amount can never be greater than the usual standard deduction available for your filing status. So make sure to get with your CPA if you're not clear about your tax filing status for your dependents. And if you're interested in joining my private client program to get financial coaching and financial planning services, you can schedule a free consultation with me by visiting firesightshare.com/coaching. The income thresholds for the marginal tax rates are also going to increase in 2024. Before you try to destroy me in the comment section, or try to, this is actually a good thing. And let me explain how this works. Because for the longest time in my early 20s, I did not understand how marginal tax rates work. Let me first show you. This is the 2023 tax brackets for single individuals. For the longest time, I used to think that if I made $100,000 a year, and then the IRS would take out 24% or $24,000 for the federal income tax. That is not the case at all. It is a progressive tax system, so only a portion of your income is going to be taxed at 10, 12, 22, 24, 32, 35, and 37%. So if your taxable income after the standard deduction is $47,000 a year in 2023, then you have to pay 10% of that $11,000, 12% of that $33,725, and then 22% of that remaining $2,275. So if you add these up together, it's going to be $47,000. And then your effective tax rate will be about 12%, or a total of $5,600 $11,647.50. It is a progressive income tax system. Let's take a look at 2024 tax brackets, and let's assume that the income is going to stay the same in 2024 at $47,000. So your first $11,600 will be taxed at 10% or $1,160, and then the remaining $35,400 will be taxed at 12% or $4,248 under the new tax bracket. So your effective tax rate would be reduced from 12% to 11.5%, saving a total of $239.50 in 2024. Again, assuming that your income doesn't change. And take a look at the tax bracket for married filing jointly. The first 10% of the marginal tax rate is being increased from $22,000 to $23,200. And the second bracket at 12% is being increased from $89,450 to $94,300. And if you're in the 22% marginal tax rate, the income threshold is being increased from $190,750 to $201,050. That is a significant increase. And you're going to be in the 24% marginal tax rate if your taxable income is under $383,900. And that's also an increase from $364,200 from the year before. So you're not even going to get to the 24% marginal tax rate until you hit about $200,000 in adjusted gross income. And just to recap on the differences between marginal tax rate and effective tax rate, the tax brackets I just showed you are the marginal tax rates. Your effective tax rate is the average amount of taxes you're going to pay. So let's assume that my wife and I are collectively making $179,200 a year in adjusted gross income in the year 2024. Our standard deduction as a married couple filing taxes jointly will be $29,200. So our taxable income will be $150,000 after the standard deduction. Using the marginal tax rates, we're going to pay the first 10% of $23,200, which is $2,320. And then we're going to pay the next $71,000 in income for 12%, and that's going to come out to $8,532. Then we're going to pay the remaining $55,700 out of the $179,000 in income under the 22% marginal tax rate, which will be $12,254. So the total taxes, or what we call the effective tax rate, would be $23,106. If I divide that by $150,000 in taxable income, then it's 15.4%. So the highest marginal tax rate in this scenario is 22%, but the effective tax rate is 15.4%. If my income goes up even higher as a married couple filing taxes jointly, then I'm going to be taxed at 24% after $200,000, 32% after $380,000, 35% after $487,000, and then 37% after $731,000. And if this explanation has been helpful to you, let me know in the comment section down below and share this video with your friends and family. You should also let them know that I recently launched a brand new website where you can sign up for a free membership to get your free financial resources by visiting firesignature.com/resources. You do not need a credit card to apply whatsoever. These financial resources are absolutely free for you to use.
Incredible.
And the last thing I want to share is the capital gains tax rates for 2024. The tax rates for the long-term capital gains and dividend distributions or qualified dividends will remain the same at 0%, 15%, and 20%. The income thresholds for these tax rates will increase by 5.4% from the 2023 levels. So if you're a single individual making less than $47,000 a year, your long-term capital gains tax rate will be at 0%. That's an increase from $44,625 in 2023. The 15% tax rate will kick in when your income is between $47,000 and $518,000, which is an increase from $492,000. And most people are in the 15% capital gains tax rate anyway. And about 1% of Americans are in the 20% capital gains tax rates. And if you're a married couple filing your taxes jointly, you can get a 0% capital gains tax rate if your taxable income is less than $94,000, which is an increase from $89,000 a year. The 15% tax rate will kick in when your income is between $94,000 and $583,000, which is an increase from $553,000 in 2023. Beyond that, you'll get taxed at 20% long-term capital gains or dividend tax rates. But what hasn't changed is the 3.8% net investment income tax, which is something that's been in place since 2013 and kicks in at $200,000 for individuals and $250,000 for married couples filing taxes jointly. This includes your interest, dividends, and capital gains. And keep that in mind if you're a high income earner. And knowing these capital gains tax rate at 0% is going to be huge for my early retirement journey. That $94,000 a year is the $2,024. So if I retire in 2030, I wouldn't be surprised if that number goes up to $100,000 or even more, adjusted for inflation. I'm gonna make a video about how to retire early with just dividend income or capital gains from the stock market. So be sure to subscribe if you haven't done that already. And I may be a financial coach or a financial planner on my business, but my primary job is to teach you the basics of personal finances. This is why I have over 25 financial resources that you can download for free on my website at firesidechat.com/resources. I believe that basic financial education should be free for every single American. What I charge my clients is if I create personalized financial planning for their future. Now, a lot of these videos I put out are something that you can find on the internet. I just learned to organize them a little bit better so that I can present you with the latest information on your financial journey. Imagine if people like me and countless other financial coaches and financial planners went to every high school in America to teach them how to budget their money, file annual taxes, learn to save money in a high yield savings account, invest in a Roth IRA, contribute to an employer sponsored retirement account like the 401k, or learn how to invest for their early retirement.
That would be wonderful.
Help me share these videos so that people can learn how to get out of debt and work on their future. And this has been another beast of a video, and I hope you got a lot out of it.